Cardinal Health has increased its dividend for 25 consecutive years. However, Cardinal has lately fallen out of favor on Wall Street. Over the last 3 years, the share price has dropped by about 45%, but Cardinal supplies close to 85% of hospitals in the U.S., and the dividend yield is near 10-year highs. Can Cardinal improve the health of your stock portfolio? Let's take a look. A large concern for Cardinal Health is that while the share price has declined over the past 3 years, so have operating earnings. There seems to have been margin compression due primarily to generic drug prices, and these pressures are expected to continue into 2019. Consolidation in the pharmacy industry adds to the pricing pressure, with 50% of Cardinal Health's revenue coming from its top 5 clients. The bargaining power of these clients is increasing and puts pressure on its profit margins. To help offset the margin compression, management wants to make the company leaner by reducing costs by $100 million in 2019 and $200 million in 2020. Recent divestitures and strategic partnerships have made evident the focus is on the core business. Two recent acquisitions of Cordis and Patient Recovery show that management is trying to decrease political risks concerning drug prices. With or without the new acquisitions, the medical segment business should grow organically. In latest earnings presentation, management stated earnings per share midpoint target of about $5. If we use the historical 10-year median PE ratio of 17, we get a target price of 85, which may be a bit optimistic. However, with a favorable dividend of about 3.9%, Cardinal should be a portfolio consideration, but please conduct your fundamental analysis. So now let's take a look at the charts. We're looking at a 20-year monthly chart on Cardinal Health, and the symbol is CAH. And for disclosure purposes, I do not hold any shares of Cardinal Health at this time. Looking at the price chart here, it looks like we had a top back in 2015, early 2015. And this is an example of one of those rolling stocks where the high was 3 years or more ago, and now it seems to be bottoming. So again, this is a pretty good stock to take a look at because the cycle is quite different than what we're feeling in the S&P and perhaps some of the other major indices. So again, this cycle here peaked in early 2015 and has been correcting for a number of years. Moving down here to the MACD, we can see that the bottom is attempting a base right at this point here. Now, we've seen a couple of times in the past where it attempted the same things, but those looked feeble compared to the bottoming process that appears to be forming right now. And this bottoming process is somewhat similar to what we saw back in 2009 into 2010. So there are some points of reference here that you can use to follow what's happening with Cardinal Health. Looking here at the histogram, very long bottoming process. Again, we had attempts at that point and that point, and we have another attempt at a bottom and a rise here. I think this one's going to be successful, but stay tuned, of course. Looking at the price rate of change here, the same sort of thing, a very long bottoming process. Now, the fast line has come through the slow line several times, giving several head fakes. So, just be patient and be slow and watch this. But I think that the point where it is in this chart is very favorable. Going back again to the 2008, 2009 through 2010 timeframe is going to give you another point of reference to watch. So I think what we're seeing now looks good in comparison to that earlier time frame. Going here into the relative strength shows much of the same. Very nice bottoming process. That looks real good. Into the stochastics, I can't say much more. Same thing. Looks good. Volume is picking up. I like that as well. And again, here in the Williams, this chart here is different in its bottoming process compared to back here. This was a very interesting bottoming process with a lot of sawtoothing down at the bottom. This doesn't, it has the sawtoothing, but not all at the bottom. So to me, this is a nice basing pattern and it looks good. I'm not sure if I can say that that's going to be the liftoff point, but I think we are getting close. And I think you can take a look at Cardinal Health, study the fundamentals, but within the next month or two, I think it's going to be a stock that you want to take a look at with strong consideration. So for today, that's ChewDog Charts. Thank you.